All right, capital goods is the space we are talking about. Renjith is joining us now. Renjith, how are you analyzing the space? Because when we get a lot of managements on the channel, Siemens, all of them, they are giving us visibility of next couple of quarters of strong rebound in order flow. Even export opportunities opening up quite a lot for many of them if one were to listen to the analyst con calls which they did after the earnings. What is your thought on this space in particular and the larger companies in the universe?
Yeah, after a long hiatus, we are seeing some of these capital companies, at least in the commentary, they have shared a lot of optimism. And till December, we were thinking that it might be due to the pent-up demand. But given the continuation of this uptick in Jan and Feb, especially from the private sector, the orders and the overall demand, we believe that the things are turning positive for the sector. And also, we have seen some of these steel companies announcing capex, especially from JSW, and the Tata expansion is there. Arcelor is planning capex. Even most of these steel companies have a deleveraged balance sheet. So probably we believe that with these large capex announcement coming and given the optimism in the overall user industries from the private sector, the sector should see a good growth from here on.
Right.
Yeah.
Okay. So if one were to take some stock picks, the name which are there under your coverage, what are the top ones, one or two ones, and what kind of valuations are they trading? Do you find comfort there? Any particular targets that you have set for yourself for 12-18 month year period?
If you look at the target prices and the stock performance, most of the companies have seen a very good rally in the recent last 4 to 5 months. So we believe that still there is upside in an L&T point of view, because relatively it hasn't participated much in the overall rally, unlike Siemens, Cummins, and other product-related companies. So we believe that L&T is a very good candidate to look at even at these levels, because they are one of the pioneers in terms of the steel manufacturing turnkey projects, and also they are in material handling for steel plants and cement plants. So with this steel and cement capex, we believe that L&T can also benefit in addition to Siemens and other product companies. So related to the product companies, L&T has not seen the kind of re-rating. So we stick to L&T and in the short term. And if you want to look in a 3 to 4 year perspective, then it's a right time to look at companies like Siemens and Cummins and Thermax kind of players, so who are largely dependent on private sector and they have very good cash flows.
Right. Okay. Let's talk about some of the specific ideas. In Cummins, did you see, you must have caught the export commentary bit. What are your thoughts on how big can that opportunity actually come? You have an ad rating over there. In 22-23 kind of scenario, what kind of earnings jump can it see?
So in a Cummins perspective, when you see the last 3-4 years was tough in terms of export, given the crude prices where they were, and there was an overall slowdown in the developed economies. So in the recent commentary, the management also shared this perspective that they also believe that after a long time they are seeing demand for diesel backup power from the export market. So probably generally they used to do around 1700 to 1800 crores of exports, which has come down to 1200 crore recently. So we believe that this can come back to those levels in the next 2 to 3 years. And it can even overshoot that if this commodity rally and the kind of infrastructure spending which US is planning to envisage actually fructifies.
Just stay on with us for a moment. There is a sudden sharp crack coming. In fact, Renjith, thanks a lot for joining us. I will let you go on that one. Before we get you some more, interesting stocks to talk about, just mark the sharp crack which is happening.